Perfect. So welcome everybody. We are getting started with our webinar here. This is part 2 of our 6-part series about day trading, how to become a professional day trader. In the last webinar, we talked about day trading basics. Today, we will continue talking a little bit about day trading basics. So we'll talk today about the 3 secrets to day trading success. I want to show you how you can achieve your trading goals. But for this, it is important that you set actually trading goals. Yes, I will show you, and this I think was in the introduction, how to make $150,000 a year. So it is possible, and you know that I'm running basically a trading school here. It's private coaching that we are doing. We have many successful traders. Just here a few minutes ago, I got out of our live trading room where this morning we have been trading several markets. So we are currently watching 6 different markets, and we'll be talking about this. I'll show you how to achieve your trading goals here, how to increase your winning percentage, and I'll show you what it takes to be a trader. So today, guys, actually, we do not yet want to talk about specific day trading strategies. We might do it towards the end of the seminar here. This is why I brought up the charts that we can talk a little bit, and as you can see, we are looking at the euro versus the dollar on 15-minute charts. So this morning we first had a nice up move, and now the euro is coming down again. So we are in a nice downtrend here. So I'll comment these charts and we'll take a look at this. But you might know, having a trading strategy is certainly very important, but there is more to trading than just having a strategy. And what I experience throughout my coaching sessions when talking to aspiring day traders is that many day traders do have the wrong mindset. And you know, the mindset is so important because we talked about it very briefly in the last session. And let me just quickly bring up the chat here to make sure that I'm not missing anything. Okay, so what we want to do, you want to make sure that you have a solid trading strategy and that you have the right mindset. You all might have heard about the experiment that Ralph Vince did several years ago, but it is still valid. Ralph Vince has actually proven that having a profitable trading strategy is not enough to make you a profitable trader. And this is why we start this series with the day trading basics, to make sure that you have the right mindset. The experiment that Ralph Vince did a couple of years ago, let me briefly outline the experiment. He took 40 PhDs. So he ruled out, of course, guys who had a PhD in statistics or mathematics, because this is what it's all about. But he took 40 PhDs, so supposedly smart people, right? He gave them a computer simulation, and this was actually a trading simulation that he had here. The trading strategy was very, very simple. Everybody started off with a $1,000 account. The trading strategy had a 60% winning percentage, and the rules were very simple. Out of this $1,000 that you had in your account, you could risk as much or as little as you want. So you could risk $1 or the whole $1,000 on every single trade. If you won, you made exactly the amount that you risked. So let's say you risked $100 and you won, you made $100. If you risked $100 and you lost, obviously you lost $100. Now, he let these guys trade, the 40 PhDs, over 100 trades. And out of these 100 trades, there were 60 winning trades. Since this was a simulation, he could prove that there were 60 winning trades. So obviously, you had a profitable trading strategy here. And if you would have just betted, what, $100 every single time, you would probably have come out positive. But guess what? 38 out of these 40 people lost money. 38 out of 40 people lost money. Only 2 of these smart guys, the PhD, made money. So why did all the others lose money? Well, it was because of a gambler's fallacy and poor money management. They let their emotions get into the game. So before we get started here actually with this webinar, let's quickly talk about it. And I decided not to use a PowerPoint presentation here this morning. So I'll type a few things down here on the chart because I think it's a little bit more interactive, a little bit more interesting than having a prepared PowerPoint presentation. So let's talk about it. First of all, as a trader, what are the 4 main characteristics that you should have? And let me bring it up here. First of all, first, you want what we call to play above the line. What does it mean? Playing above the line means that you are taking ownership for everything that's happening in your trading. And this is what you do rather than blaming or making excuses or denying it, that there is a problem. It means that you're accountable for your trading decisions and actions and take responsibility for something, for doing something about it. You see, there is no bad market. There's just a bad trading approach to the market. Nobody forces you to trade a certain market, and if a market becomes untradeable or difficult to trade, you can change to another market. And you can change your trading approach and adjust your trading plan. You see, there are many things that you as a trader can do. Ultimately, you are responsible for your results. I mean, this is a great thing. You have a very, very small team. Besides having a trading coach, and I'm dead serious, you should have a trading coach. If you have a business, you should have a business coach. If you're serious about losing weight and getting in shape, you should have a business coach. For your financial situation, you might want to have a financial coach. For your trading, you want to have a trading coach. For your life, you might want to have a life coach. Seriously, guys. I mean, don't walk through life without a coach. Look at all the guys who are successful and famous and ask them, why are they so successful and famous? And they all say that they either had a good mentor or a good coach. So this is what you want to do. So you have a very small team. You have your coach, you have your broker who is part of your team, and you maybe have your accountant. That's basically it, okay? Besides this, you are on your own. And this is the wonderful thing about trading. I mean, you instantly know whether you are successful or not. I mean, within minutes, you know if you're a good trader or not. So every single week should be a profitable week, or at least every single month, because otherwise you'll lose in the long term. You can't do this. But this means that you're responsible and nobody else. So play above the line, take responsibility and ownership. The second characteristic of a trader, very important, you need to have a positive attitude. Let's see. Next time I take typing class before. I know I keep saying this. Attitude. Maybe I should use slides again. Okay. You need to understand, and this is what I want to show you today. Trading can be simple, but it's not easy. Along the line when you're trading, you will face some losses. And yet, you need to get up every single morning believing in you and your strategy and winning. You know, if you focus on losses, you know this how the mind works. I mean, the mind does not know the word not. You cannot wake up in the morning and say, I hope that I will not face a loss again. I mean, it's basically the famous example here is if I would tell you, do not think of a pink elephant. What does your brain do? Start thinking about a pink elephant. I mean, we do not know the word not. And the same in trading. If you just focus on, oh, hopefully I will not realize a loss. What does your brain do? Cross out the not. All right? And you become whatever you focus on, whatever you set your mind on. You know these examples like when you buy a new red car that suddenly you see everywhere red cars. It's the same like this. So you must have a positive attitude. So you must get up in the morning and say, okay, today will be another winning day. If not, you shouldn't trade this day. It's very important that this is difficult as a trader, especially if you experience some losses here. But the second very important characteristic of a trader is have a positive attitude. Third thing you need to do, exercise, honesty. Did you overtrade this week? Did you let your emotions get into the way? Or you maybe didn't stick to your strategy, whatever. All these things happen. But don't lie to yourself. Don't make excuses. As I said in number 1, take responsibility for your actions and your decision. You can make a mistake, then you admit a mistake, you learn from it, and then move on. And the fourth thing here, and then we'll stop the short intro, is be committed. No, double M, just one T. Okay. Be committed. Trading success is not happening overnight. Trading success requires commitment, time, and effort on your part. There are already enough traders in the market who think that they don't have to learn anything, that there will be a magic system out there that will place the trades for them and make them rich, that they don't even have to be present, that they can go to their daytime job and just let the computer do all the stuff for you. Well, you and I already know that this is a sure path for failure. Trading is like every other profession. You learn the basics, you apply them, you gain experience, and then based on this experience and based on the mistakes you make, you refine your trading. And like in any other profession, the learning never stops. And this is why you guys here, this is why you guys keep coming back to this excellent source of education here at fxstreet.com, where you can listen for free to webinars conducted by trading experts here. So I'm glad that you're different here, because many people just expect to make millions of dollars after only investing a few hours in their education, maybe just reading one book. It doesn't do the trick. You also wouldn't trust a doctor who just downloaded some free ebooks from the internet about brain surgery, right? Will you? But this is what many people do when it comes to trading. So make sure that you ask yourself, are these the 4 characteristics you can commit to? Playing above the line, having a positive attitude, exercise honesty, and being committed. And let me put this up here. Let's see. So, okay. I am sorry, I just saw some comments here from the administrator that we're moving the text box to the left of the screen. Hopefully this does the trick. Okay. Wonderful here. So, how to make a living as a day trader, the 3 steps to success. It is very important because this is also what traders get upside down. The 3 steps to success, and it doesn't matter whether this is in trading or in life or whatever you do. There are 3 steps that you want to do. The first is you want to define a goal, and your goal should be a so-called SMART goal. What is a SMART goal? SMART is an acronym standing for S, specific, M, measurable, A, being attractive, R, being realistic, and I'll move the text box here in a second, and T, having a time frame. All right? So this is the first thing that you need to do. So let me move this here a little bit to the left of the screen. Define a SMART goal. Specific, measurable, attractive, realistic, and time frame. Guys, when it comes to trading, this is so easy to define such a goal. You just say how much money you want to make with trading every single month. Okay? So if you, for example, say, I want to make $5,000 every single month with my trading. Is this specific? Absolutely, it's $5,000. Is it attractive? No, sorry, is it measurable? Yeah, sure. I mean, you look at your account statement at the beginning of the month and at the end of the month, and if there's $5,000 more at the end of the month, you reached your goal. So it's easy to measure. Is it attractive? Depends on you. You see, guys, I get this question all the time. Can I make a living with trading? What is a living for you? I mean, just here, after I get out of this seminar, I'm coaching a guy who lives in South Africa. I mean, I don't know if you have been to South Africa recently, but I've heard that you can make a very decent living there with $2,000, $3,000, or $4,000 a month. So definitely, I mean, you can live a very good life there. I think the exchange rate is 12 to 1 or 16 to 1. So making just $2,000 would be the equivalent, like in the U.S., making $30,000 or $32,000. Now, if you're living somewhere in California and you have a fancy house, a mansion, and you have, I don't know, 3 kids in college or something like this, $4,000 per month is probably not enough. $4,000 depends on your house, might just pay the electricity bill. So it depends on your lifestyle. If you have such a lifestyle, you might need $20,000, $30,000, maybe $40,000 a month. Make sure that you define what is attractive to you, are realistic. This is where you need to talk to experts. They will help you to make sure that you have a realistic goal. You don't know whether the goal is realistic or not. So here's where you need some help. Time frame? Do we have a time frame here? Absolutely. Within a month, we want to make the $5,000 here. So this is certainly a SMART goal when it comes to trading. What is the second step? And this is, again, where many traders get it down. Now we make a plan. We make a plan how to define the goal. So the first thing is, and let me move this here a little bit over to make it a little bit more readable. Okay, this is what we want to do so that it looks nice and it looks wonderful. So After you define a goal, you make a plan. You first decide what you want to do. And I mean, this is where many traders get it upside down. Many traders just first start looking for a strategy. And then they think, how much money could I make with a strategy? This is like you start building a house without knowing how it will look like. I mean, yeah, you end up probably with a house, but you don't know how many rooms it'll have. You don't know if this is big enough for your family. You don't know how many stories it'll have. And this is what many traders do. They just start trading and then let's see how much money I can make. And when I ask them, how much money do you want to make with trading? Oh, as much as possible. That's good. That's a smart goal, right? Is it specific? As much as possible is not a smart goal here. So you first want to make sure that you find what you do, and then you make a plan. And in a plan, there are these 7 steps that you do. You first look for a market, and this again is what traders do upside down. I have so many traders who say, "Oh, I'm trading the Forex." Okay, depends on your goal. I do not know if Forex is the best market for you, or if you should be trading stocks, or if you should be trading futures, or if you should be trading options. And then whether you trade options on stocks, whether you buy options or sell options. See, when it comes to trading, we have so many different possibilities. It's again like becoming a doctor. I mean, yeah, if I ask my son who is 4 years old and say, what do you want to be? He might say, I want to become a doctor. But I mean, as it gets closer that you have to go to college or medical school, you somehow have to have an idea what kind of doctor you want to be. Do you want to be just a family physician? I'm sorry for saying this came out wrong, okay? Do you want to be a family physician? Do you want to be somebody who conducts brain surgery? Do you want to maybe be a doctor who teaches or does research? See, there's so many possibilities. The same here in trading. So first decide what you want to do and then how to do this. And now here comes the third step. The third step is actually, after making a plan, execute the plan. I just want to touch this here very briefly because this is, again, and I'm sorry, I need to bring the text up here. Okay. Okay. Executing the plan. Now, and this is why it ties into what I said previously, this is where you exercise honesty right now and be committed and make sure that the plan works. I mean, it's like everything in life. It doesn't happen overnight. Same here. Trading success doesn't happen overnight. And along the way, as I said previously, you will face losses. And you see, our problem as traders, or a problem of many traders is, we fail to execute the plan and then we doubt the plan. And I mean, it happens to the best. As I said, I just got out of the trading room here this morning that I'm conducting every single morning for my students. So we have been trading for the first 2 hours, and we had beautiful setups here, and we had traders who took the setups and made some money, and we had some traders who were doubting. The plan was good. The plan was there. Were the rules crystal clear? Absolutely. And for whatever reason, some traders decided to chicken out and say, no, I mean, the market opened with such a, we were talking right now about the E-minis because this is the first trade that we did here. So we started looking at the E-minis and, oh gosh, the market has been gapped down this morning. I don't think it really moves much lower, okay? And this is where we missed the trade. I mean, you know what the S&P or the stock indices did the morning. Yeah, open, they trended a little bit up, and then went all the way down. So we are in a very nice downtrend here currently in the stock indices. So also other setup. And you see, we failed to execute the plan and then we blame the plan. And the classic example is dieting and exercising. All right? I'm using this example because everybody can relate to this. If you want to lose 10 pounds in 10 weeks, here's what you got to do. Number 1, eat less. Number 2, exercise more. Number 3, the end. That's it. Okay? You reduce your calorie intake, you burn more calories, and this is how most of us, I would say 98% or 95%, are losing weight. It is that simple. Yet, I mean, if I'm at the checkout counter at the grocery store and I look at the magazine, every single week there's a new diet coming out. I mean, for the girls, it's, I don't know, how to get killer buns and how to get to the thighs you ever wanted. And for us guys, you know, men's health, right? how to get the killer abs or how to get, I don't know, wide shoulders. It's every month. It is the same. Why is that? Because we fail to execute the plan. And it is even worse in trading. As you see, I talked about the Ralph Vince experiment previously. What do you think? The 38 people who lost money, what do you think? What they blamed it on that they lost money? Most of them said, well, I'm sure that this was a losing trading strategy. No, it's not. It's proven that it was a winning trading strategy. It was you. But this is what traders do. Many traders, they experience a few losses and then they jump and buy the next trading system. This is why there is this huge, tremendous industry trying to sell you trading systems. And we have so many traders who spend more money on chasing the Holy Grail. And I must admit, I'm somewhat guilty of it too. I mean, I wasted 4 years of my life trying to figure out or to develop my own indicator or to figure out the Holy Grail of indicators, the magic combination that I can completely automate my trading and that I have a 100% winning percentage. 4 years of my life. This was between 96 and 2000. Before I figured out, guys, believe me, you can't take the human element away from the market. You need human judgment. Just think about it for a moment. There are planes. We have autopilots in planes, right? Yet, we have pilots flying these planes. Do you really believe that the airline industry wouldn't like to get rid of the pilots and then that they would like to put their planes really on autopilot? And the same in the trading industry. Sorry. Don't you think that Goldman Sachs or any other big brokerage firm or big trading house would love to get rid of all their folks that they have on the payroll, all their traders, and just have some computer standing somewhere in the basement? They would love to do this, but you can't take the human factor away. There's always something going on in the market that requires human interaction. So, very important here. So, the 3 steps to trading success is to define a SMART goal. Make it specific, measurable, attractive, realistic with a time frame. Then, step number 2, you make a plan. And this is what we're going to talk about in our next session here. In the next session, we walk through the 7 steps, how exactly to make a plan. And let me briefly run it down. Number 1 is selecting a market that you want to trade. Number 2 is the time frame. Number 3 is a trading approach, whether you want to have a trend following or a trend fading approach. If you use a trend following approach, what tools, indicators you use to identify a trend here. And if you have some minutes towards the end, I'll show you how to do it very easily, very simple with trend lines. And as you can see here on the screen, what you see are Bollinger Bands. So I'll show this to you. So this is number 3, selecting a trading approach. Based on this, number 4, you define the entry signals. Number 5, you define your exit signals. And you define your exit signals in various ways. You define your stop losses, your profit targets, and your time stops. We'll talk about it the next time. What are all the different ways to express your exit points here? Number 6, you evaluate your trading system or your trading strategy. Now that you have done it, you see, okay, this was my goal. I've developed a plan. Let's make sure that I achieve actually the goal with the plan that I just made. And if you do not achieve the goal, then you need to make another plan. Don't start executing it. You know, this is sometimes, it's like this in life. You try one thing, it doesn't work, you try another thing. But make sure that you really execute the plan before you jump on to the next one. And after evaluating your trading strategy, you might start optimizing your system, but very important, without curve fitting it. And we'll talk about this in detail, about these 7 steps, in our next and upcoming session here. Okay, so what we want to do, let me just quickly show how successful traders define a goal and make a plan. Let's just say, practical exercise here, that you have a yearly goal. Let's say you want to make $100,000 a year, or $120,000. Let me just use a simple example here. $120,000 per year. So you break it down into a monthly goal. This is what you want to do. And you say you want to make $10,000 per month. Now you want to break it down into a weekly goal. And in a weekly goal, you want to make, what, $2,500 per week. Question for you all. Should you break it down into a daily goal and say you want to make $500 a day? Ken, I'll repeat this here in a second, okay? And I'll write it down. Ken, I'll repeat it. So, do you think you should break it down into daily goals and say I want to make $500 a day? And now we see who listened to my previous seminars and webinars. Let's see, some of my students in here? Yes. No. Okay? No daily goals. Here's why. Why don't you break it down into daily goals? In order to succeed in the market, two conditions have to be met. First of all, the market has to be ready to trade. Example, if you have a trend following approach, you want to make sure that the market that you're trading is actually trending. And you know that there are some days when the markets do not trend. You know, for example, ahead of a Bernanke speech, as we had last week, the market is not trending. The market is just going sideways because everybody's waiting for it. Ahead of a major report, the market might not be trending. Yes, we do have something like holidays. Next Monday, is it Martin Luther King or is it President's Day already? I think it's MLK, right? So there's a holiday. Exchanges in the US, some exchanges are closed or have abbreviated trading hours. Very unlikely that they are trending. You see, there are certain days when the market is not ready for your trading approach. Whatever trading approach you use, it will not work every single day. So, number one, in order to succeed, the market has to be ready. Number two, you have to be ready. And now look at what we said previously. Number two, have a positive attitude. You see, if you are a professional trader and you do this for the living and you do it day out, day in and day out, there might be some days when you wake up in the morning and think, you know what, I can't see charts anymore. Believe me, it'll happen, okay? If you're new to trading, it's also exciting, you can't imagine it. Well, believe me, it will happen. If it does, don't force yourself. If you wake up in the morning and just this thought creeps into your mind that says, I just hope I won't face another loser today. Don't trade unless you can reprogram yourself to be absolutely positive. If you wake up and you don't feel 100% because you have, I don't know, allergies or you have a cold or you have a headache, you just had a great time the evening before with some neighbors or I don't know, whatever you did, and you wake up the next morning you think, ooh, whoa, what's going on here? You shouldn't trade. So, there are two things. The market needs to be ready and you need to be ready. And there are some days when this is not the case. If you keep trading on these days, you will lose money. The perspective of a week is a very important concept that we know from Stephen Covey and his 7 habits of highly successful people. And the same applies to trading. Set a weekly goal. Don't break it down into a daily goal. It's really difficult to achieve a daily goal every single day. It leads automatically to overtrading. You set up yourself for failure, believe me. Professional traders have a weekly goal. They have weekly perspective here. Okay, so you have a weekly goal of $2,500. Now let's assume, and let me move the text box a little bit out of the way, that you see this. Let's say that you have a trading strategy, and this is when we go to step number 2, develop a plan. And in this trading strategy, on a winning trade, you have a profit target of, let's say, $300. And you have a stop loss of $200. Your stop loss should always be smaller than your profit target. Have a profit target that's larger than your stop loss. Why is that so important? Well, then you will make money even if you just have a winning percentage of 50%. A good ratio to start off here is, as you can see, 1 to 1.5. Depending on the market and your trading approach, this can go as high as 1 to 1.5, meaning for every dollar that you risk, you might be able to get $2.5 out of the market. For most market and most trading approaches, a ratio of 1 to 1.5 or 1 to 2 is a great ratio. And I'll show this to you in detail in our next upcoming session when we talk about how to develop a plan. Always have a trading strategy, a stop loss that is smaller than your profit target. Okay, so let's assume that this is our trading strategy. Our goal is to make $2,500 per week. Our profit target, when we have a winner, and let me get rid of the arrows here a little bit. They always come when I start moving this, because they might be a little bit distracting. No, I wanted to hit the none. Let me quickly do this and bring up one other box here. Okay, so the key question is how to achieve our weekly target. Now we have two options. Option number one, we always, by the way, always in life you have two options, okay? So very rarely you run into a situation where you just have one option. You can do one thing or you cannot do it. Anyhow, so first, how to achieve our weekly target. If we would have here a weekly goal of $2,500 and a profit target of $300, we could do this by having 8 winning trades in a row, right? Or basically all we need is 8 net winning trades. 8 net winning trades, and we make 8 times $300, and we have $2,500, close enough to our weekly goal here, okay? Just for the sake of the exercise. Now, what is the other possibility? And the other possibility, and this is now very important that you understand this concept, you could have 1 winning trade, and you do it with 8 lots. If you're a forex trader, or 8 contracts, if you are a futures trader. Okay. So, what do you think is easier to achieve? We're not talking about risk right now. We're just talking about what is easier to achieve. Is it easier to achieve 8 winning trades in a row, or do you think it is easier to achieve 1 winning trade? As you can imagine, it is easier to achieve 1 winning trade because, let me just do this one example here. If you had a winning percentage of 50% and you do your first trade Monday morning, what are your chances of having the first trade a winner? It's 50%. So if the first trade is a win, you're making here $300 on a trade, trading with 8 lots. Let's say this 30 pips. Trading with 8 lots, you made $2,500. What should you do on the second trade? On the second trade, stop trading. And this is a huge mistake that many traders do. Many traders keep trading. I mean, just yesterday I talked to a trader, and he currently has, because he has a very small account size, his goal is making $600 a week. And as I said, your goals, yeah, for him it is really attractive because I'm not revealing his account size, but based on his account size, this would be awesome if he could do it every single week. Perfect. He did it actually yesterday until noon. He made the $600. And I told him, John, his name is John, so this is why I'm using the name, because everybody can be John, right? I said, John, stop trading, because what will happen now, most likely, and you know this, you'll give back the money to the markets if you're getting greedy. And again, this is why it is so important that you understand the concept. You first define a goal, and then you make a strategy how to achieve the goal. Now, as we all know, I mean, having the first trade as a win is wonderful, but what if the first trade is a loss? Well, if the first trade is a loss, then obviously we need 2 more trades to have the 1 net winner. But you see the concept? And if you then, after a loss, have 2 more trades and both of them you're lucky and they are winners, wonderful. Stop trading. And yes, it can happen to you that sometimes you are done with your trading on a Monday or on a Tuesday. Worst case scenario, maybe on a Wednesday. So let's talk about a worst case scenario here. Let's talk about the worst case scenario, and I'm just seeing if I have a little bit more space here. Okay. Let's say that you have 3 losses. 3 losses in a row. You're losing on every single losing trade. We said you're losing $200 through 3 losses, $600. Now, if you're trading 8 contracts, you're losing here $4,800. What you need right now is having 3 wins. 3 winning trades. 3 wins, because then on every single win, you will make $300. So this means you're making $900, 3 times 300, okay? And this times 8 contracts, $7,200. Net? You're making $2,400. Not talking about commissions, okay? That's another thing that we have to factor in, of course, the commission. But I want you to get the general idea here. So this is the worst case scenario. In the worst case scenario, let me bring this down here and remove the arrow. If you had a consistent winning percentage of 50%. So let's talk about that right now. Let's talk about how to achieve a consistent winning percentage of 50%. This is by being very picky. By only taking the trades where all the ducks are lining up, where all your entry criteria are fulfilled. And again, this is why I said previously, don't set daily targets, because there are some days when not all your entry criteria are met. And the example I like to use here is the ice cream example. And those of you who have been listening to my webinars before already know the example. But it's just perfect. It illustrates my point. If you want to have an ice cream and you go down to the 7-Eleven and say, hey, I want to have a chocolate ice cream, and this guy behind the counter says, all we have is vanilla and strawberry. You say, no, I want to have chocolate. And you say, well, it's strawberry or vanilla. Take it or leave it. Well, overall, you wanted to have an ice cream, right? So, okay, you settle maybe for vanilla. It's not exactly what you wanted, but after all, you got an ice cream. I mean, you spend some time to go down to the 7-Eleven, so there's some effort involved, and now you really want to have your ice cream. The same is in trading. Now, just consider if you would go into a Baskin-Robbins and say, I want to have an ice. And this guy says, wonderful, that's the business we are in. What ice cream would you like to have? What kind of flavor? And you say, you know what, I'm in the mood for chocolate. And this guy starts asking you, do you want a chocolate chip cookie dough? Do you want to have white chocolate, dark chocolate, sweet chocolate, I don't know, milk chocolate, chocolate with nougat, whatever. You know how many chocolate flavors they have. And now you get exactly what you want. Do this. Apply this in your trading. Don't settle for vanilla. Go for the chocolate flavor you want. Make sure that you pick the trade, only the trade that has is according to your plan. You see how it ties all back? Execute the plan. Don't settle for less. If you have your entry criteria and you have spelled them out, you say, this is exactly what I'm looking for, and you know that you are ready because you're mentally prepared for trading, then make sure that you trade. Do never trade because you're bored. Do never trade because you have the itch and you feel the urge like, I should be trading. No, okay? You should only be trading if all your ducks are lining up. You should only be trading if chocolate is available, okay? If not, go to the next 7-Eleven or wait for the next day. Just walk away. Absolutely. Be very picky here. Be very picky. Okay. So this is what we want to do. We have, I think, 5 more minutes here. So let me just give you a brief rundown because Ken asked about it previously. What exactly we're going to cover here in the next session, and then let's just finish the session here with a very brief concept how you can approach the markets here. Okay. So let's see, what can we erase here? I've wrote a couple of things on the screen. Let me just bring the volume down here because we're looking at a Forex market, and as you know, there's no volume in the Forex market, so that we have maybe some space somewhere for the 7 steps what we're going to talk about the next time. And this is actually when we're talking about developing a plan. First, you select the market. Second, you select a time frame. Third, you define your trading approach. Fourth, you define your entry signals based on the trading approach and the market and the time frame. Entry signals. Number 5, you define your stop loss, your exit points. And these exit points are stop losses. These exit points are, and don't worry, I'll bring it up here in a little bit that you can all see it, profit targets. And these exit points are also very important time stop, and we'll talk about this. 6, you evaluate your system. Evaluate your strategy. You evaluate your strategy to make sure that you achieve your goals. And then you can start thinking about optimizing your strategy, but very important without curve fitting it. So let me see, where can I move this that you all can see this here a little bit? Is that okay? That's a little bit messy on the screen. But you see what I like about doing this here right on the screen? You basically right now also have a summary of what you learned today. And when I'm rushing through slides here, you might have forgotten already what I talked about. And you see how important it is. It all fits together. It's like a big jigsaw puzzle that you're doing here as a trader. Okay, all these pieces are coming together. And this is when you get the wonderful, beautiful picture of you being the successful trader. Okay, so very briefly, let's take a look at the market. And let's see how can we make money in the market and give you a sneak preview on what you're going to learn the next time when we're talking about the 7 steps. Let's just say we talked about selecting a market here, and I'm looking at the euro versus the dollar here, selecting a time frame. I just right now selected 15 minutes, and we'll talk about time frames here the next time. And the trading approach we want to use, and now I have to move it a little bit over here and remove the arrow. You know what I love to do? So I love to use a trend following approach. And what do you do basically in a trend following approach? You buy when the market is going up, right? And you sell when the market is going down. And you basically stay out of the market when it's going sideways. So this is basically what we do in the trend following market. I'm sorry for the mess that I'm making here now on the screen, but we're anyhow close to the end of the session. So what can you see here? The chart that you see on the screen. See that here, since yesterday afternoon, basically through the whole night, the market was going sideways. This here is around midnight, Central Standard Time. So we're talking about 7 a.m. in the morning. This is when European markets open, basically. We had a brief breakout to the upside, tried whether the market tried to see if we are getting out of here, if we could break out. It didn't happen, and the market goes down. And guys, it is so important that you learn one important concept. And the most important concept that you can do as a trader is learn how to draw a trend line. Because if you can draw a trend line here, you can see that the market is actually going down here. Now, if you combine trend lines with Bollinger Bands, you have a very powerful approach. And this is what we're going to talk about the next time. What you want to see, the lower Bollinger Band, and this is sometimes what is misunderstood. In a downtrend, the lower Bollinger Band is basically leading the prices. So you want to make sure you have a confirmed downtrend when you see that prices are touching the lower band, and then that the lower band is leading prices here. So at this point up here, you do not yet know whether the market is trading down. If you're breaking the support here, and then prices are touching the lower band, is definitely when you know it. Let me turn the other way around. What happened then? The market was trending up. Can you draw a trend line? I certainly hope that you can. When can you be sure that the market is actually going up? This is here when you see that prices are touching the upper band, and you see in an uptrend, the upper band is leading the prices. Then again, if you are doing a downtrend, this is actually when the lower band is leading the prices. Okay, I'm getting a signal from the moderator here. This is really what we got to say for next time. I'm talking about these approaches here. So today was the second part about our series, how to become a professional day trader. We were talking about the day trading basics. We were talking about the 4 characteristics that you must have as a trader. If you do not have these 4 characteristics, you should not be trading. After you check this and make sure, yes, this is the person that I am, you start this 3-step process. You first define a goal, then you make a plan, then you execute a plan. This is how you make a plan, and this is what we're going to cover next time. You break down your yearly goal into monthly and weekly goals, and take the high probability trades. Be very picky in your trading. Important concept. Once you reach your goal, stop trading here. Very important. Moderator, let me ask you, when do we have our next session? Usually we have this session always on the first Tuesday of a month. Is that correct, Maud? Do we have the next session on the first Tuesday of next month? We just moved to this month because last week. All right, here we go. February the 5th, okay? So this is when we have the next session here on February the 5th. If you guys want to contact me, let me quickly type it in the chat here. You can visit our website at rockwelltrading.com, or you can simply send an email to support@rockwelltrading.com. Okay, I'll respond to the email. For those of you who have already been with me for a while, you do know that we offer a free coaching session through our website. So if you're interested in talking to me or one of my experienced coaches here, just go to our website and you can register for a free coaching session here. It's anywhere between an hour, hour and a half, where I teach you some very important concepts. Okay, I have to wrap up here because the moderator is about to kick me out. We have another fantastic session coming up, moderator. What do we have coming up here? What is the next session? And guys, please keep coming back to fxstreet.com. It's an excellent source of education here. You have high quality speakers. And the next session, we do not know. Okay. Anyhow, so this webinar will be available as a recording. I thank you all for coming here. I wish you all a wonderful day or wonderful evening wherever in the world you are. And I'll see you again then in, what is it, already 3 weeks, right? February the 5th. So February the 5th, where we will talk about the 7 steps how to make a trading plan, a trading strategy here. All right. Thank you very much, and I'll talk to you soon. Thanks and bye-bye.